Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you.
Can you comment on converting a passive NFE into an active one? Is it possible?
Yeah. So first of all, you can always inflate your assets, okay? Because it's based on, is 50% of your assets earning passive income? So what happens if I inflate that? And there's a complexity which we'll go into later on about the OECD just confirmed that cash or money is not a financial asset. Now that to me is crazy, because to me the most financial type of asset is cash. But they did that because when FATCA listed all types of passive financial assets, they just omitted cash. I think that was an error, okay, because it doesn't make sense.
Yeah.
And so the OECD tried to fix it up by saying if it's got the potential to earn financial income, then it's a type of financial asset. But I'll hit that question later when we deal with cash. So one of the ways that people do it is the easiest way to inflate your assets, let's say all your assets or investments, the easiest way is to use intellectual property, because that is really esoteric, okay? What is intellectual property? There's so many different types. And the one that I focused on is patent pending, because it's quite easy to copy somebody else's patent pending because they've only taken that out in their country. Because if you want patent pending all over the world, you've got to pay to do that in each country. I mean, you can do the EU, but somebody in Asia that's taken out a patent has probably only done that for Asia, not for Europe. So you look at what he's done and then you can put it in. So the question is, can you use intellectual property to bloat your balance sheet?
Yeah.
And IFRS says the following: if it's internally generated, then that must be expensed, not as an asset. But if it's externally, such as a patent pending, because I can take out a patent and I think I'm going to make a fortune from it, and then I'll give it a value, okay? And I'll amortize that. So the IFRS says you can only amortize that over a realistic short term. But what does that mean? Is 20 years a short term? I think so, if a patent is valid. So it definitely is. There are other ways of inflating your assets, let's say synthetically. And then you've just got to look after the income. But that is much easier to do. If less than half your income comes from financial assets, then you are active. So you can invoice consulting or commissions and so on. There is an easier way to do that, but I'll get to where OECD tried to attack cash. And they said if cash has got the purpose to earn interest, even if it doesn't, then it's still accounted as towards a test, towards a passive income. But then you just tell the bank the purpose of the cash that I'm accumulating is not to earn interest, it's to buy a building, it's to buy a business, and so on. And most banks will go with that, okay?
I see.
If your cash is not earning interest.
Okay, all right.